Hey all, welcome to Share Trek. This is Raj here. Today, one of you gave me what I think is a great feedback, and I'm going to test drive it right now. The suggestion was that viewers look for information of happening stocks and niche stocks, and then they do their own research when there's a lot of hype around certain stocks. I understand this more like saying that niche of genomics is okay, but we should not ignore other big things that are happening out there. I personally agree with this approach, and hence today, in this video, I'm going to talk about two big stocks in my portfolio that I'm agonizing over due to the Microsoft plus ChatGPT reality. And in this video, I'm going to share my thought process and my conclusions. These two stocks are Microsoft and Google. So let's get started. Welcome back, friends. Both Microsoft and Google need no introduction. They are part of any decent portfolio. I have liberal amounts of both in my portfolio, and I have performed an analysis to determine what I should do, given that Microsoft announced a heavy investment in ChatGPT and a partnership as well. The Bing integration improves the competitive ability of Bing over Google by taking it to the next level in an instant. Here is what I am thinking. Cash-wise, both companies are great, they have plenty of cash and are comparable. In terms of cloud revenue, let us take a look at this website called techcrunch.com, which is where I found the latest stats on the share of the cloud market. So let me take you into their website. So here we are in the website of TechCrunch. And if you look at the chart out here, you can see that they have plotted out all the players. Now we have a graph element out here, which is in gray, which is called others. This is a collection of all small operators and not the top 5. And at the very top, you can see it's Amazon. It's ruling the whole cloud game. They are coming at around, I think, 35 or 36% of market share. Next to them is Microsoft. Microsoft is somewhere around 23 to 24% of the cloud market share. And then after that, we have Google, which overtook IBM somewhere in Q4 2018. And it has not moved up very sharply, but it has moved slightly behind Microsoft. Microsoft has done much better in capturing the cloud market. I think a good deal of what they do with Microsoft 365 would also be to explain. And then Google has come in at around 11 or 12% of cloud revenue. Of course, IBM is a distant fourth. Alibaba trumps IBM out here. This is all the status as at the end of Q4 2022, and the source is Synergy Research Group. So this is what I have here on the website as per TechCrunch. So I would say that in this count, Microsoft is leading. If you consider that Azure cloud infrastructure will be used for entire ChatGPT AI project, getting into Bing and other apps, as well as sold to individual clients that they can rebrand and sell. That's what Satya Nadella had said in the press conference. I can visualize a captive market for Microsoft Cloud. This is almost like advanced booking the market share as Bing with AI Copilot takes off. For Google, their cloud revenue size is less, and their strength was in the Google search engine and advertising. But with the demo of Bing with the AI chat feature, it seems it is possible to offer a superior advertising product, and that can seriously dent Google's predominance in this area, in my personal opinion. This is assuming Google stays static. However, I think Google will not stay static. Google is already ramping up its own AI. There are already ChatGPT plugins for Chrome, but what Google needs to do is to upgrade its search engine to the next generation, where Bing now has taken the first steps. While Google gets its act together in this department, Google will continue to be at a disadvantage.
It's a new day in search. It's a new paradigm for search. In fact, a race starts today in terms of what you can expect. And we're going to move. We're going to move fast. And for us, every day, we want to bring out new things. And most importantly, we want to have a lot of fun innovating again in search, because it's high time.
Microsoft has a paid suite of Office products in the Microsoft 365 subscription and team, as well as project management and databases. Google has free version of Office equivalent and chat products. I think Microsoft 365 will be a big advantage for Microsoft as it builds in AI capability into Team and the Office products. This will not only make it even better than the Google equivalent, but also justify paying a price ongoing in terms of subscriptions, annual subscriptions. So it's like a captive market and steady income. This in turn will increase the use of Microsoft Cloud and its market share. So I think this collaboration definitely gives Microsoft an edge. On the other hand, Google has YouTube, and that is a leader in its class. Microsoft doesn't have anything similar. However, Google has, in my opinion, lagged behind in YouTube as a class leader because as a content producer, I find that Patreon and other services like Patreon are making inroads into the YouTube market, and they are able to inch into the market share because Google has not updated and made the YouTube membership option competitive for creators. So what is happening now is creators get their following from YouTube, and then when they create the membership option, YouTube takes away 30% of membership revenue. So that's a big chunk of revenue. Whereas platforms like Patreon offer to take just 5 to 6% of the revenue. So they are much more competitive. So they are cannibalizing YouTube's revenue potential from memberships, and creators need to keep a little more of the membership fee because they are doing the hard work as well, and they also need to own the client relationship. When it comes to YouTube does not allow creators to own the relationship, and creators are at the mercy of the algorithm to show their video to the right audience. And that's also another reason why creators, as soon as they become a bit successful, they migrate to other platforms like Discord, Patreon, and others. Because those platforms allow direct connection with the audience, and it's not based on search algorithms. So once you are in Patreon with your favorite content producer, you are there, and there is no way the content producer is going to disappear from your watch list. So they will always be there. So those are the things which are likely to puncture the dominance of YouTube, and Google, I hope, takes note. So overall, I think both Microsoft and Google are at par. I suspect this incident will make Google proactively reform its product policies and upgrade the technology. So within a year, I expect Google to regain lost ground. And also the AI game needs a few big players, and Google will surely be one of them. There'll be at least 3 or 4 players in AI, out of which the top 2 definitely would consist of Microsoft and Google, in my personal opinion. Now, further to this, there is also all the other games of having collaborations and backward integration and so on. So we have players like NVIDIA who are out there with the chips. So they will also have to form part of the infrastructure. So there are a lot of other gameplays that Google can do in order to gain back the initiative. And meanwhile, Microsoft will also be attempting to counteract those things and regain supremacy. It will be a very interesting battle to see. Now, let us look at the valuation to see if one is better than the other. For this, I will turn my view to the TradingView platform. So first off, I think Microsoft pays a dividend, but Google doesn't pay a dividend. So that's the very first thing that I would like to mention. And then we are in this chart here right now. I'm looking at the price chart for Microsoft, and I can see that at the peak, they were somewhere out here at around 349.80 on Friday, 19th November 2021. From there, they have now fallen all the way down to somewhere around 74.63%, sorry, 24.63%. So that's a fall of 24.63% out there. And they have a bunch of supports out here for them to prevent falling. And today they have dropped 0.68% as compared to Google, which has dropped minus 5.83. Now, all this drop that you see in Google is likely to reverse as soon as they come up with a firm announcement of what it is they are trying to do with AI in order to counteract the ChatGPT Microsoft alliance. So I'm expecting that Google is likely to fall further. And let me go ahead and draw some lines of support out here. So I'm thinking that, so I think the first support is going to be out here. So there's a long way for Google to fall. And they have already covered the gap up, so that is a positive out here. I'm just going to expand the size of this window so that you can see clearly. So there was a gap up out there. We have covered that today. So I'm thinking that we still have support out here at 86.47. Google may want to come up with an announcement, but at the same time, they can't rush and make it look like a token announcement. So they will have to come up with something serious. It may take a little bit of time. So if it takes longer time, I think we are going to test this support. If it doesn't take that much long of a time, then we are likely to bounce back again. That is my personal opinion. And if you look at the momentum has dropped, which means interest in Google has reduced. But whereas if you look at Microsoft, the Microsoft interest is still high. The momentum is still pretty high. So Microsoft is riding the wave right now. And now let me go and talk to you about what it is that a retail investor will look at. So if a retail investor has to own both Microsoft as well as Google, with Microsoft, they get dividends on a regular basis. So even if they don't do covered calls and any fancy things, if they just do buy, hold, and prosper kind of a thing, they are still getting some revenue. Whereas with Google, I think the revenue has to come for you through capital gains, and the capital gains will happen when the share price goes up. So at this point of time, for a retail investor, it is going to be difficult to hold on to Google. Whereas Microsoft, if you had Microsoft, it will be a much easier decision to retain Microsoft. So that's my opinion. And now let us take a look at the key ratios. So let me go to look at the ratio for Microsoft. So in Microsoft, you can see the price to earning ratio is 29.66 and price to cash flow ratio is 23.62. Now, if I was to look at the same for Google, you can see that Google has a price to earnings ratio of 22.29 and price to cash flow ratio of 14.15. So please do not worry about noting this down or anything, because in the end I'm going to do a comparison and I'll show you the numbers side by side. So don't worry about this, because these numbers look small and it's very difficult to show this on the screen in proper size. So let us continue with our investigation out here. I'm going back into Microsoft again. And when I look at Microsoft price to earnings, let us look at price to book ratio. So price to book ratio for Microsoft is 10.85, which is the current price to book, 10.85. And if you look at their price to sales ratio, you can see that they are at 9.77 currently. So that's what we are looking at here. And in terms of Google, if you look at Google, they have a price to sales ratio of 4.61 and a price to book ratio of 5.02, which looks superior to me. And then if we go back again to look at Google financials, then you can, Microsoft financials, then you can see that when we look at the quick ratio or current ratio, let us take the current ratio. Current ratio is 1.93 at this point of time. And also the return on equity, if I was to check that, is 39.31. So if I was to look at return on equity for Google, so I would say that return on equity for Google currently is 23.62 and their current ratio is 2.38. And finally, if we were to look at their debt to equity ratio, Google has a debt equity ratio of 0.12, whereas our Microsoft has a debt to equity ratio of 0.43. There again, Google looks much better. And let me put it all together for you on the screen, and let us just go through which one is good and which one is not so good. Well, here I have the salient points for you. If you look at this chart out here, you can see that Google has a price to earnings of 19.78 at Q4 2022, while Microsoft has a P by E of 29.66. Google is undervalued at present. Google has a price to sales of 4.09 as compared to Microsoft, which has 9.77. Google is more efficient in sales as compared to Microsoft as per this parameter. Google has a price to book ratio of 4.45 as compared to 9.75 for Microsoft. So both companies are trading at a great premium, but Google premium is almost half of Microsoft. So Google wins here in terms of value, comparative value. Google has a return on equity of 23.62 as compared to Microsoft of 39.31 because Microsoft provides superior return on equity thanks to the dividends. Google has a current ratio of 2.38 as compared to Microsoft of 1.93. Both companies are good, but Google is superior by far. Google has a debt to equity ratio of 0.12% as compared to Microsoft of 0.43. Both these companies have great debt to equity ratio, but Google is incredibly better in this count. So overall, if I was to look at everything, I would say that it's almost a wash. Just like I explained earlier, it's almost like the situation with Yellow Pages. Phasing out of old technology. So Google search technology is now becoming older and obsolete. And the next level is AI chat kind of search. And Google has to catch up very fast. Until it does that, its valuations are going to look more and more attractive because its price is going to fall, and that will make Google attractive. But at the same time, one has to remember that Google bouncing back is contingent upon Google convincingly proving to the market that they have a good enough AI engine to put under the Chrome banner and give competition to Microsoft. And even after doing that, I think Microsoft has won the cloud battle out here against Google. That's my personal opinion, and it remains to be seen whether going forward this is going to help Microsoft to go on top of Amazon to lead the cloud pack. So it's possible that Satya Nadella has pulled off a coup out here. We'll have to wait and see. In conclusion, I'm thinking that we are in the process of going through something similar to what happened to Yellow Pages. Yellow Pages did well and paid steady dividends, and that drew people into a kind of lull and complacency. And when Google took off, Yellow Pages died, and along with that, many lost their investments due to the complacency. The current situation is almost similar. The life of current generation search engine is coming to an end, and the replacement in this case is going to win not only the search race, but also the cloud race. At this point of time, it seems like the attractive valuation of Google will continue to get more attractive as Google tries to catch up. I'm sure Google will succeed to provide a comparable product. So this is a time to sell covered calls on Google based on one's risk appetite. In any case, it seems that Microsoft is going to beat Google and retain its lead in cloud services. Holders of Microsoft will see capital gains and will also have an opportunity to sell puts at attractive rates. As far as I am concerned, most of my time is taken doing research, writing script, and making videos. I therefore have a passive investment style right now, and I do not plan to make any changes to my portfolio at present. My time horizon is long, and I'm not too much worried about Google in the short term. I hope you found this session interesting. Please let me know if you like videos like this so I can watch out for opportunities to produce some of these kind of videos in the future. Please let me know in the comments what is your own analysis and strategy if you're holding both Microsoft and Google, or if you have just got Google or just Microsoft, what is it that you're planning to do? Please put it in the comments below. I'd be very curious to hear what you guys are doing. That way I'll get a window into what the community is thinking about, and that can inform me in my future analysis. So that's all for now, my friends. Thanks and have a great day. Bye for now.